2 years ago this month, history was made. On September 30th, at an emergency meeting here in Irish government buildings, the authorities agreed to guarantee all the country's banks to the tune of 440 billion euros. It was a high-risk gamble that no other sovereign state had ever taken before.
It was absolutely monumental. It joined the Irish state to the Irish banks at the hip.
Without the guarantee, the Irish government feared economic chaos would ensue, as the banking system teetered on the edge of collapse. And it wasn't just Ireland. This was a global financial crisis that had been building for over a year, and that culminated in one of America's biggest banks, Lehman Brothers, going bust. Lehman's collapse triggered a chain reaction that put other banks at risk and threatened economic chaos throughout the world.
The entire banking system was facing complete collapse.
And what would happen would be a nuclear winter.
This was the biggest crisis in the history of market capitalism.
This is the dramatic story of the 14 days between the collapse of Lehman's bank and the government signing its banking guarantee. A story that began 2 decades ago when Ireland joined the club of global finance, embracing a set of ideas whose ultimate failure brought this country and the Western world to the brink. It's September 15th, 2008, 2 weeks before the Irish government signed the banking guarantee. In New York, America's fourth largest investment bank, Lehman Brothers, collapses, sparking global chaos.
The banker's bank goes bust in America, but the fallout will touch us all.
The headlines tonight. Black Monday, panic hits financial markets as top US investment bank Lehman Brothers goes bust. But first, there was worldwide panic on financial...
I was attending a party conference in Galway. What I thought was, we haven't seen scenes like this since 1929, 1930.
Panic spreads through financial markets, triggering fears in the United States of social disorder.
He talked about declaring martial law in the United States. They were afraid that the people might take to the streets. And that is the level of terror that was building up after Lehman went under.
The Lehman collapse was as if a volcano had erupted, and suddenly everybody was covered with ash.
Lehman's was a colossal bank and a crucial cog in global finance. Its failure marked the climax to a year of financial turmoil, brought on by the collapse of America's subprime mortgage market. Hours before Lehman's went under, leading bankruptcy lawyer Harvey Miller was called in.
The view was that something would happen, somebody would step in. The concept of too big to fail had some traction.
Bank of America declines to take over Lehman's. Britain's Barclays Bank is interested, but approval is needed from UK Chancellor Alistair Darling.
I knew full well the Bank of America had looked at it and said, no, we don't want to go near it. When everybody said it's all up to a British bank, you do begin to wonder, I think rightly, what's wrong with this thing?
When Darling says no, the US Federal Reserve, America's central bank, tells Lehman's to file for bankruptcy.
We said, have you fully evaluated the consequences? And I think I used the word Armageddon. You don't understand what the consequences are going to be.
The consequences were felt immediately as banks around the world, fearful of who would be next, hoarded their cash.
Something really quite extreme had happened, where we were no longer dealing with individual institutions in trouble. The way in which banks lend money to one another, which is a crucial part of the way the system works, was seizing up.
A worldwide potential Great Depression was forming.
The collapse of Lehman's was to have near fatal consequences for already ailing Irish banks. But Ireland wasn't just a victim. It was part of the same global financial system as Lehman's. To understand that system, we need to go back a quarter of a century. "25 years ago, policymakers across the Anglo-American axis promised a better world if economic activity was deregulated. Rules around banking, imposed after the Great Depression of the 1930s, were gradually loosened. Globally, vast interconnected money markets mushroomed. Cheap credit flowed. As it did, finance became the dominant factor in many economies.
One of the big changes was the removal of capital controls restricting international movement of capital between countries.
Suddenly, finance became far, far more powerful than it had ever been before.
This was the brave new world launched by Margaret Thatcher and Ronald Reagan.
Government is not the solution to our problem. Government is the problem. The societies which have achieved the most spectacular, broad-based economic progress in the shortest period of time believe in the magic of the marketplace.
In the UK, the first architect of deregulation was Thatcher's Chancellor, Nigel Lawson.
We were conscious that the British economy had been underperforming, not just for a few years, but for decades. And something had to be done. And we decided that the central plank of this new approach would be liberalization, deregulation.
Tony Blair's Chancellor Gordon Brown intensified the process. While in America, the man in the driving seat was Alan Greenspan.
Alan Greenspan believed that the less regulation you had of financial markets, the better, that markets would self-regulate, that they would prevent boom-bust cycles from re-emerging.
The loosening of rules allowed banks borrow at will from vast new global money markets and lend without limit to their clients. Ireland's banks too had access to all this easy money. This would eventually lead to reckless lending, but to make that possible, the culture of financial regulation first had to change. And that began in the late 1980s.
Ireland got caught up in this set of ideas like conservative governments all over the world. You had a conservative government that bought into the free market ideology.
A culture of light regulation was propagated by many bankers and by many economic pundits. They believed that if you relaxed the restrictions on banks, that you encouraged economic growth, but you clearly also encouraged a great deal of reckless lending.
Before the 80s were out, Ireland embraced light touch regulation, initially with its new International Financial Services Centre, brainchild of Charles Haughey and financier Dermot Desmond.
Countries with their own financial centres thought, well, the way to attract more business to my centre is to be slightly less regulated than the other centre.
The way in which we sold ourselves in order to attract foreign banks into Ireland, particularly into the IFSC, was with low taxes and light regulation. And light regulation, in some cases, was code for effectively no regulation at all.
The IFSC created thousands of new jobs and boosted exchequer revenues. But the light touch approach soon spread to the domestic banking system.
That attitude became all-pervasive in the Financial Regulator's Office and the Central Bank and started being applied to our own financial institutions as well.
We embraced it. Partly, I think, because we've been so successful in attracting business to the International Financial Services Centre.
The IFSC's success masked the dangers ahead. The resulting lax regulation for Irish banks meant a dangerous fault line had opened, and the consequences would prove disastrous. It's Thursday, September 17th, 13 days before the Irish banking guarantee. The effects of the Lehman's collapse are beginning to reverberate. Uncertain as to who else is vulnerable, banks across the world have stopped lending to each other.
Within a few days, it was clear that entire other markets and countries were going to be affected. Then, a few days after that, it looked like Goldman Sachs and Morgan Stanley, these mighty titans of Wall Street, were also going to go under. It was like a series of collapsing dominoes.
The banking system supports the economy. If your banking system collapses, the entire economy collapses.
In Ireland, as they watch events unfold, the public are becoming nervous about the safety of their own deposits. On Friday, September 18th, for the very first time, the possibility that Irish banks may be at risk enters the public consciousness.
Hello, good afternoon, and you're very welcome to Liveline. The first caller that day was from somebody who worked in a post office, and he said, by the way, people are coming in, rightly in his view, putting their money into An Post.
I say a noticeable increase. People looking to take large amounts of money that they're looking to take out of the various banking institutions.
I was very concerned about this because anything that unsettles depositors is very bad for a banking system.
Brian Lenihan takes a highly unusual step of ringing the authorities in RTE, not to say take Joe Duffy off the air, but to say the consequences of this sort of panic on the radio could be a public panic which will bring down our banks.
I had a sense of panic, to be honest. And especially for older people, I think a lot of them are taking like their weekly pension and putting it under the mattress like that.
Closed an account I had because of all the uncertainty.
Their gut instinct was that they didn't believe what they were being told by the politicians and the regulator and the banks. That was a triumvirate that the people didn't believe.
It was at that point that concerns about the banking system seeped into the public consciousness. What would happen if the bank or the building society or whoever I have my money with gets into difficulty? People had never really thought in that way ever before.
Fearing a customer run on the banks, the government announces a state guarantee for ordinary depositors for up to €100,000. But the government is seriously rattled.
I met the senior figures in war conference for the first time at that stage, and we realized that we had a battle on our hands.
Brian Lenihan was already aware that international funds were hemorrhaging from Irish banks.
It was like a tide flowing out, and clearly you couldn't, as Minister for Finance, disclose to anybody that this was happening because the whole operation is to maintain confidence in the system.
But confidence in the Irish banking system had begun eroding long before the collapse of Lehman's, as international investors recognized that the model operated by our banks was a risky one. The deregulation of global finance would link Ireland directly to Wall Street. In the old days, our high street banks used customer deposits to fund their lending. So when deposits were scarce, you couldn't get a mortgage. But with deregulation, Irish banks could borrow as much as they liked from international money markets. Vast sums of money moved around at the touch of a button. It was up to the banks to lend it prudently.
A lot of Wall Street banks brought the whole concept of you don't need to use high street deposits to fund mortgages. You can do it from these nebulous things called money markets and wholesale funding markets. The Irish banks grabbed that happily with both arms.
Suddenly, we had the capital markets of the world available to us. And you could borrow in New York, in Paris, Frankfurt, London, wherever you liked.
These changes made it easy for a small country like Ireland to dip into the pot of international investable funds and draw out whatever was needed.
But here lay danger, because where traditional customer funds were stable, money in the bank, so to speak, borrowing on global markets was inherently risky.
Where you get into trouble is when you start to access capital markets. If they dry up, and you are high and dry as well.
The banks were borrowing for short periods, a week, a month, a year, but lending to customers for 5 or 10 years. So as their own debts fell due, they had to borrow again. Any hiccup in the flow of money, and they'd be in trouble. And the Irish bank pioneering this risky strategy was Anglo-Irish.
Anglo got itself into a position when the international money markets were freed up that it could access any amount of money and shovel out any amount of money to its clients.
And to an extent, it became like running on a treadmill. They had to run ever faster just to stay on the treadmill. And it was quite clear at one stage they were going to fall off.
Anglo was built by Sean Fitzpatrick, lending initially to small businesses. But in the late 90s, Fitzpatrick made a fateful decision to concentrate most of the bank's lending in the property market, which was booming.
They saw this as an opportunity to make more money than they had ever made before.
It was a very small group of people that were making a hell of a lot of money, so the bank recognized that.
By borrowing billions to lend to property developers, Fitzpatrick was betting that international funds would keep flowing and property prices rising. His winnings initially were huge, as profits topped $1 billion by 2007, while the share price soared 8-fold.
Anglo-Irish Bank had become the fastest growing, best performing bank stock in the world. There was a feeling of invincibility and a feeling that we can do no wrong. We have found a new way of doing this and it works.
Success drove out caution, as Anglo staff were told that they had to lend 60 million euros a day.
The bankers turned into touts, you know. They would be badgering developers at every turn, even on the golf course, you know, to say, oh, there's a really hot thing coming up here, you should get involved in this and we'll give you the money. And in many cases, they were giving them 100% or more. Or more.
The bank was growing faster than the Irish economy, and by summer 2008 had lent over 70 billion euros.
When you see a bank growing very quickly, and a rule of thumb that regulators often use is 20% per annum is very fast, Anglo was growing for over a decade at an even faster rate than that, over 30% per annum.
And Anglo-Irish Bank had been permitted to grow to a size of 2/3 of the Bank of Ireland, or Allied Irish Bank. It had a balance sheet of almost 100 billion at the time. This was a colossal bank in Irish terms.
Questions should have been asked about where that growth was coming from, how sustainable was it, and indeed, what sort of risk was Anglo-Irish Bank taking on, what sort of lending was it engaged in.
Anglo really was a case of too many eggs in one basket. 80% of their loans was concentrated in property, and that was just too great a concentration of risk for any bank.
One state body, the National Treasury Management Agency, which controls billions of public funds, was concerned. In 2007, its boss, Michael Summers, simply stopped depositing money with Anglo.
When he stopped putting money with Anglo, he was reflecting a general opinion, certainly globally, that there was something wrong with Anglo, that it was not a credible story.
Now Fitzpatrick's gamble was about to go bust. The property market that he had bet on so heavily was suddenly in trouble.
The spring of '06, prices were on fire. And then, come the summer, the market died. I mean, I work for one of the larger agents who in the first half of '06 sold 3,000 new homes. You look at a year later, in the first half of '07, they sold less than 100. I mean, the market literally turned off like a tap.
The international markets that lent to Anglo were alarmed.
The dogs in the street were barking about Anglo. They were not only selling Anglo shares, investors from overseas, particularly from overseas, they were selling them short.
International observers looking in at the Irish banking system realised that there was a very dangerous exposure to a single asset class called property.
An enormous amount of the loans which had been lent by our banks were in danger of not being repaid, particularly those that were linked to property.
This jitteriness in international markets followed the collapse of the US subprime mortgage business. Banks were now wary about lending to each other, and with Irish property also in decline, Irish banks no longer looked like a safe bet.
Welcome to a special St. Patrick's Day 6-1 news and sport. The Irish market was down with bank shares worst hit.
On St. Patrick's Day 2008, Anglo was the first to experience the changed sentiment.
The market realised the entire Irish banking system was actually funded in large part by wholesale funds that had come from outside of domestic Ireland. And international investors started to get increasingly nervous about property prices, and there was a wide-scale abandonment of the Irish banking sector. And at the top of the list was Anglo.
There were investors out there baying for blood. They recognised that there were some banks in a really weak position, and Anglo was one of those, and they moved against it that day.
As Anglo's shares plunged, Fitzpatrick's model of borrowing internationally to lend to developers locally was crumbling.
That was really the first identifiable moment in time when you could say there could be something seriously wrong in this bank.
People realised this isn't a conservative, sensibly run business. It's actually become a distinctly high-octane business using some of Wall Street's most aggressive techniques to try and drive profit growth.
Anglo was a busted flush. Its collapse could wreak havoc.
There was a major problem with Anglo-Irish Bank, but clearly nothing was done. Instead, a crisis was allowed to develop which would endanger the entire financial edifice.
The bank itself tried to hide the true state of its affairs, a deception that would soon come back to haunt the nation. It's Wednesday, September 24th, 6 days before the bank guarantee. The crisis sparked by the bankruptcy of Lehman's is spreading rapidly to Europe.
Suddenly, the European banking system went into a very rapid meltdown, and governments were scrambling, trying to secure the situation, trying to prop up their own banking systems.
I was very concerned at the time that there would not be a bank run, that there would not be those photos, pictures of films around the world showing people queuing outside banks, because I think that if we had had that, that would have been a complete disaster.
Ireland is in trouble too, and the government is becoming increasingly alarmed.
The credit markets that the Irish banks have become hugely over-dependent on simply freeze up. And that's what gives you the crisis in the Irish banks.
Our banks were very dependent on obtaining funding from other countries. And once that began to dry up, we knew that that would create very serious problems for the Irish banking system.
The government has some contingency plans, but is unprepared for the speed of the unfolding crisis. And now another unexpected turn. On Saturday, September 27th, the head of the European Central Bank tries to reach Brian Lenihan.
Mr. Trichet rang me and hadn't been able to get through to me. I was at a racecourse in County Kilkenny at a Fianna Fáil event on the Saturday. So I caught up on Mr. Trichet's message the following day, which was that you must save your banks at all costs.
It's Sunday evening, September 28th, 36 hours before the government acts, and the crisis is intensifying. Brian Lenihan goes to the central bank to hear how serious things are.
At that meeting, we had the senior officials from the central bank, the financial regulator, and they were in contact with their European counterparts.
Reports were coming in of different member states having difficulties with their banks.
Anyone that was in trouble, large or small, was potentially a threat to the entire system.
The crisis, in terms of its speed, had stepped up in an enormous way.
Monday morning, September 29th, 7:50 a.m., and decision time approaches. A global crisis, spawned in Wall Street, is closing in. As the markets open, Irish bank shares are in freefall.
The headlines. The Irish stock market reached a record low as bank shares plummeted.
At that stage, having consulted with all of my advisors, I felt it was important we meet the Taoiseach that evening.
Later that night, decisions will be made hastily at government buildings, shaping the prospects of future generations, for better or worse. In the fortnight before the government's banking guarantee, the entire financial system has been under severe strain. Now the government is close to acting. Ireland's crisis is part of a total breakdown in the globalized marketplace, a shattering event that no one in banking imagined possible. Banks make their profits from lending money, and back in the 90s, the wizards of Wall Street devised a way to increase lending exponentially, and with it, profits. Instead of keeping their loans on the books, they sold them to investors in a system known as securitization.
Bankers for a period genuinely believed that they had found a way to remake finance, and that meant they could lend money and keep lending money almost without limit, without consequences.
The bankers also thought that by selling their loans around the world, they had eliminated the risk that normally came with lending money.
These new innovation techniques were supposed to make the system stronger and safer than ever before by essentially spreading risk across the system.
The system had a fatal flaw that would bring the global markets to the brink, and with them, the Irish banks. In the United States, the theory of risk elimination would be put into practice on a massive scale, when subprime mortgages were given to millions of people who wouldn't normally qualify for them.
One of the reasons the banks were willing to lend to these people was because they weren't keeping the loans on their own books.
The loans were all mixed together, sliced up, and sold around the world as top-rated investments.
Globalization had opened up a global marketplace of fools. And America was very successful, not in writing good mortgages, but finding fools all over the world.
It looked like alchemy, turning risky loans into endless profits. But the myth was exposed when the American housing market suddenly crashed in 2006. Subprime mortgage defaults spread like wildfire.
Almost overnight, investors woke up and realized that there were bad loans in the financial products that were being sold across the world. And the crucial problem was they couldn't tell where those bad loans actually lay.
And that's when the truth emerged. The world's biggest banks weren't just selling subprime junk, they were buying it as well. The risks remained right at the center of the system.
Banks like Citigroup and JP Morgan Chase and Merrill Lynch and Goldman Sachs, they were eating their own poison, so to speak. When the property market collapsed, it turned out they had hundreds of billions of dollars of losses.
The assumption that risks were eliminated because they were so scattered, split thin, that there was hardly any risk left in the system, produced effectively the biggest risk that could have been expected, which led to the collapse.
The world's financial markets lost faith in their own system. Trust between banks evaporated. They stopped lending to each other, and the house of cards crumbled. Within a year, Lehman's bank would collapse, and Ireland's banks, so dependent on this magical pool of money, were staring into the abyss. It's noon on Monday, September 29th. And into the final hours before the government steps in. This crisis has been brewing for a year without government action. So why now? The answer, Anglo-Irish Bank is about to go under.
Anglo was on the verge of being put into involuntary liquidation by a German bank who wanted their money back.
The bank doesn't have that money, so it can't open the next day unless something is done that evening to change the situation. Anglo-Irish Bank falls on the Tuesday.
At 1 p.m. on Monday, 29th. In desperation, Chairman Sean Fitzpatrick and CEO David Drum turned to Bank of Ireland.
Sean Fitzpatrick and David Drum met with the chief executive, Brian Goggin, and the chairman, Richard Burrows, up on the top floor of Bank of Ireland headquarters in Baggot Street. And what they said was that they were insolvent and they requested that they be taken over. Essentially, Anglo-Irish Bank was hanging by a thread. Sean Fitzpatrick, who was regarded as really a titan of the Irish banking industry, a poster boy for Irish financial services, suddenly came crashing down to earth. To walk into that office, down that corridor, towards the door of the chief executive's office, that must have been a very emotional and quite dramatic moment on September the 29th.
Bank of Ireland refused to help Anglo. Sean Fitzpatrick approaches AIB, but again is snubbed. Fearing contagion if Anglo folds, AIB and Bank of Ireland's top men turn to the government for help.
Later that afternoon, a request came through from the chairman and chief executives of the two main Irish banks, the Allied Irish Bank and the Bank of Ireland, to meet me and the Taoiseach about their problems.
Well, the sense was that if the government didn't do something, there would be a domino effect of one bank falling after another.
It's a wee bit like a man jumping off the cliff, tied to a rope to another man, to another man, to another man. The guy who jumps off the cliff, i.e. Anglo, would have simply dragged the rest of them down.
Brian Lenihan agrees to meet the bankers later that night. The political class, who allowed Anglo grow too big to fail, now face the consequences, while the banks who championed the free market are begging for state help. Of the two banks turning to the state for help, AIB was Ireland's biggest. Bank of Ireland its oldest. Although once considered cautious, they had followed Anglo, borrowing huge sums on global money markets to lend to property developers. It was a gamble that promised spectacular profits if it succeeded, or ruin for the country if it didn't.
Anglo was making such large sums of money in profits, and also its share price was rising at such a huge degree that all the other banks wanted a slice of that action.
AIB and Bank of Ireland's decision to compete with Anglo couldn't have been more badly timed. By the mid-2000s, when they took the plunge, the world was in the grip of a massive property bubble.
This was the biggest bubble in world history.
A bubble is bad news. It means house prices have raced far ahead of wages, and by definition, bubbles burst.
Ireland had the biggest bubble of all. house prices in Ireland were more overvalued, not only in any other country, but any other time in history.
And this was the marketplace where Ireland's main banks had placed their biggest bets.
AIB in particular became far more active in the property market, taking a very aggressive approach, deciding we're going to put Anglo-Irish Bank back in its box, we're going to get these loans, we're going to be the lender of choice to the major developers.
By 2008, AIB had lent 47 billion euros to property developers. Bank of Ireland also grew its balance sheet through high-speed property lending.
From 2004 to 2008, the balance sheet doubled from 100 to 200 billion. It took 4 years in recent history to do what it had taken 221 years previously.
While pouring billions into one sector of the economy, property, the banks had forgotten an elementary rule of prudent lending.
It's a basic banking rule, particularly for high street banks, that you don't lend excessively in any one area. We do seem to have gone well over tried and trusted limits.
As competition among banks intensified rapidly, standards dropped, to a point where decisions on loans to property developers for hundreds of millions of euros were made in an instant.
People can't differentiate between a 40,000 euro loan for a car and a 400 million loan on a development project. We can make the decision in 24 hours. I mean, if the analysis is that simple, then I think we've now seen what the results of that simplicity is.
There was not proper loan documentation kept. Very simple things like knowing what security you have on your loan. In other words, the bank wants to make sure that they can get their loan back, so they want to make sure that they can seize a property. And now we're discovering that the banks didn't actually put together the legal documentation to actually be able to do that.
Ireland's banks had become serial reckless lenders into a property bubble, which as 2006 drew to a close, was beginning to burst. By 2008, major developers who owe the banks billions can't repay. And the international markets that fund our banks have closed their doors in a global credit crunch. Caught in their own trap, the big two banks have turned to the government for help. It's Monday, September 29th, 7:50 p.m., hours before the government are forced to act. The bankers make their way to government buildings. Bank of Ireland's chairman Richard Burrows and CEO Brian Goggin, along with AIB's chairman Dermot Gleeson and CEO Eugene Sheehy. News of their mission could trigger panic.
I think this is an extraordinary moment in Irish history. The two chairmen, the two chief executives of the two largest banks are reduced to driving up to government buildings, essentially begging the Irish state to come to their aid, to save them from the consequences of their own folly.
What you've got at this moment, effectively, is the bankers holding a gun to the head of government, saying,
"We have a hostage called the economy, and if you don't bail us out, we'll shoot the hostage."
If you don't do this now, tonight, tomorrow is going to be blood on the street.
The bankers want the government to guarantee the money they borrow from the international markets, so these markets will resume lending them the funds they need to stay open.
What surprised me at the meeting was how great the funding pressures were throughout the system. That was the critical issue. The fact was that the funding available to any of the banks in the system was at best a matter of weeks.
But AIB and Bank of Ireland's focus is on Anglo, which all present know won't open tomorrow unless something is done tonight. The big banks want Anglo treated separately. They want it taken into state ownership, along with Irish nationwide building society.
One of the bankers present suggested we should examine the option of nationalising Anglo and one other institution, and that issue was raised on the night.
They wanted to take Anglo out of the equation. If Anglo was technically insolvent, we'll let the government nationalise them, and then basically by doing that, give them some more time, some breathing space.
The bankers believe Anglo will be nationalised at the weekend. An enabling bill has been drafted and the regulator informed. AIB and Bank of Ireland agreed to tide Anglo over until then with a €10 billion loan. But nationalisation does not proceed.
And there's this dramatic moment in the discussions where Brian Cowan slaps his hand on the table and says, "We're not fucking nationalising Anglo."
Well, the Taoiseach certainly didn't use any expletives or bang tables in my presence about these issues. We weren't convinced that the message that a nationalisation would send out in the circumstances of funding declining in all of the banking system would have been a strong message for the country.
It's 1 a.m. on September 30th, and the bankers depart, leaving the politicians to decide. Government advisors Merrill Lynch say there's no right or wrong course of action, but warn that an all-bank guarantee could weaken the state's ability to borrow money. It's the government's call. Yet as they deliberate, critical information is missing that will decide Ireland's future. A momentous decision is about to be taken in an information vacuum. How much money the banks stand to lose on their property loans isn't known, yet the taxpayers would be responsible for such losses under a full guarantee.
We were very suspicious about the property-based lending which had taken place in the banks, but we weren't in a position to form a judgment on that.
The banks were saying to the government, look, we do not have a bad debt problem. We are solvent. We are not going to go under because of all of these property developer loans. We just have a liquidity problem.
Liquidity, day-to-day money, was running out. But the bank's problem went right to the heart of their property loan books and to their long-term solvency.
They knew they had lent billions for property development in a property market that was collapsing, and the problems on their balance sheet were a lot bigger than they were admitting.
Maybe it was a case of denial, maybe it was a case of the two big banks had buried their heads in the sand and they didn't actually see that they were overexposed to the property sector themselves. And if you consider that 3 out of every €5 that had been lent in this country was on property, of course the banks were exposed.
Was the government sufficiently informed regarding what was the true position of the Irish banks? I don't think it was, and part of that is really down to the fact that the banks were consistently saying, we're grand, we don't have a problem.
They definitely either knew that the market was really stuffed, in which case they told lies, or they didn't know, in which case they were technically incompetent, which, neither proposition is particularly attractive. Were they liars or were they fools?
Brian Lenihan knew he couldn't rely on the banks for the full story.
They tend to minimise their exposures. They have to maintain confidence in their system, so they're reluctant to tell you when there is a real difficulty.
For at least a year before the guarantee, the government knew the property market was in decline from the fall in their own revenues. But no one seems to have highlighted the implications for the banks. In the days and hours before the guarantee, government advisors were telling them the banks had adequate reserves.
The government could have been in a position to know, perhaps, if the regulator was doing a more invasive and better job of monitoring exactly what was going on in the Irish banking system.
Light touch regulation conceived by government had left a massive gap in official knowledge about what was going on in Irish banking. Ireland was now going to pay the price. It's early morning, Tuesday, September 30th. Just before dawn breaks, the government decides. Anglo-Irish Bank will not be nationalised. Instead, the entire banking system, Anglo included, will be guaranteed without limit.
The government didn't know what it had done. It had no idea of the scale of the liabilities that it had undertaken on our behalf.
The possible alternative was so horrendous, a general banking collapse, which is people on the streets, breaking down the doors of shops because they need to get food to feed their children.
If the guarantee works, social upheaval will be avoided and funds will flow back into Ireland's banks. But that's something that could rattle our neighbours, as Brian Lenihan soon finds out.
I contacted Christine Lagarde, who was the president of the European Finance Ministers' Council at the time, and I explained to her in French what the position was.
Brian actually rang me before the opening of the stock market, and I think just before he made the announcement. And he told me that he felt that he had no other option but to issue that sort of broad guarantee for all the Irish banks.
Her reply was, "Oh gosh," that's my first memory.
As I put the phone down, I thought, if that happens, then there can be, this sort of flow of funds channeled to Ireland. That caused a bit of frustration.
Minister Lenihan next informs the Irish public.
The government has just announced that it's guaranteeing all deposits and borrowings for the Irish banking system.
Financial institutions involved are AIB, Bank of Ireland, Anglo-Irish Bank, Irish Life and Permanent, Irish Nationwide and the EBS Building Society.
I interviewed Brian Lenihan, and it was clear he was very nervous.
We must take action to secure the stability of our banking system, and that's what the government have decided to do.
His eyes were bloodshot, he was a little bit jumpy, and he was very concerned about the public reaction.
My fear was that it's a huge responsibility to sign up for a guarantee whose initial exposure is over 400 billion.
Britain's Finance Minister, Alistair Darling, is stunned when he hears the news.
The first we heard about it was when I switched on the radio at 6 o'clock in the morning.
The Irish government's unilateral decision to guarantee the debts and deposits of the country's largest banks has drawn a thinly veiled attack from Downing Street and the European...
It's sometimes better if you don't hear these things on the radio first thing in the morning.
The British were none too pleased, and the Prime Minister rang the Taoiseach, the Chancellor rang me on 2 occasions.
I was anxious to ensure that we acted as much as we possibly could together. If you offer certain guarantees in Dublin, then it has repercussions on institutions in London. People would take their money out of British banks and put them into Irish banks.
In the short term, the guarantee works. Anglo and the other banks stayed open. Our neighbours may have been annoyed, but that was the least of Brian Lenihan's worries. As the extent of the commitment made in the name of the Irish public dawned slowly, the guarantee would come to be seen as one of the most controversial government decisions ever made. In the 2 years since the signing of the Irish banking guarantee, the controversy it provoked continues.
The bank guarantee will be seen as the single most important decision that has been made to date in the history of the Irish state. No government in the history of the state has made a single decision with such incredible long-term consequences.
As a decision that Ireland has made, it was absolutely monumental, because It actually joined the Irish state to the Irish banks at the hip. All our fortunes were in together, and we were going to sink or swim together.
There was no alternative to an extensive guarantee at the end of September 2008, given the circumstances at the time and given the situation we'd got into. But the banks should never have been allowed to get into that situation.
The guarantee was to help the banks over a short-term cash crisis at minimal cost. Instead, it mushroomed into the most costly bank bailout of all. The government insists it won't bankrupt the nation. And anyway, they say, there was no alternative.
We're a country that depends on funding the state with international investment in this difficult time, and our main banks require international funding. So putting all that at risk poses huge dangers for the wider economy, and that's a risk I wasn't prepared to take.
The problem politically is, once a decision like that is taken, no government is ever going to admit that it got it wrong, and no government's ever going to admit that there were other options available to it that might in retrospect have worked better.
The banking crisis of 2008 shook the world as the most powerful financial system ever created came close to collapse, and with it, entire economies. Ireland couldn't escape the fallout in a globalized world, but the international crisis was really just the trigger. For Ireland had long been on a dangerous course of its own. Next week's Freefall will look at the domestic issues that caused Ireland to have the hardest crash of all.
I remember one day asking the question, was there risks about this? And the answer was, you shouldn't be worrying yourself, Taoiseach. You know, that's the free market working. And in other words was, stay quiet, Taoiseach.
Well, from falling banks to a depressed banker, Jim Carrey stars as the down-in-the-dumps Carl Allen, who challenges himself to agree to everything for 1 year with hilarious consequences. Yes Man, tomorrow night at 9:35.